Hello everyone, this is Taylor from thetradinganalyst.com, and we're going to go over a recent trade that we took, and I'm going to go over these things that happened within this trade before, during, and after, and we're making this video so that you can learn and just give you a quick win so you can maybe add some of these strategies to your own trading. So in this video, you're going to learn 5 different things, okay? You're going to learn Fibonacci retracements. You're going to learn gap fills and why they're important, and why stocks tend to reverse at gap fills. You're going to learn the TA, which is short for Trading Analyst Reversal Pattern here. This is a patented reversal pattern that we've just noticed and come up with and studied. And it's a really powerful pattern here that showed itself on this particular trade that we made here that we're going to show you in a minute. The next thing that we're going to learn here is the resistance turning into support. And lastly, we're going to discuss volume by price, which is very, very similar to volume profile. So if you've heard of either of those, they're somewhat interchangeable. The concept is very, very similar, almost identical. So those are the 5 things that we're going to discuss today, and I'm going to show you, because most people are visual learners, so I'm going to show you on the chart all of these 5 things. So take some notes here, maybe write down right now all 5 of these things, and then you can take notes once I have the chart up, and you can really learn and get better. All right, so let's take a look at the chart and the trade. All right, so here is the chart for IBM. All right, we're trying to trade IBM. Well, we're not trying to. We did trade IBM, but we were trying to look for a bounce on IBM. We had this huge gap up here. This is an earnings reaction, and you can see it just started tanking right here. And so we said, well, IBM is most likely going to get a bounce. Where will that bounce most likely occur? All right, so the first thing that we were looking for is a Fibonacci retracement level. All right, so what you do is you draw the Fibonacci retracement level tool from the nearest major low to the nearest major high. Okay, so I'm going to go to the Fibonacci retracement tools right here on the bottom left corner. It's on most charting software, okay? So we're going to draw it from this major low to that major high, okay? And you don't have to connect it, well, with our particular tool on this charting software that I use, you don't have to align this low to that high. You just have to get the price point. So what we can do here is draw this from right there and right about here, approximately. So we drew it from this low to this high. You can see it goes over there right to the top there. All right, so now what do we look for? All right, so as you can see on the left hand side of the screen, we've got this 61.8 Fibonacci retracement level. Okay, so that's really mostly the only Fibonacci retracement level that we use. As you can see, there's 23.6, 38.2, 50%, and then the 61.8% right here. So this is just a 61.8% retracement. Okay, that's all it is. Okay, from this low to this high, going down 61.8. So why do we use the 61.8 Fibonacci retracement level? Well, typically, if a stock is going to remain, and again, we trade stocks both and options, both short and long and short, okay? So in this particular case, we're looking to go long, or we're bullish on IBM, so we don't want IBM really to go much lower than this 61.8 Fibonacci retracement level. Otherwise, that trend could be changing, okay? Or that trend could be changing to the downward direction, or the trend could just stop and we could just maybe just trade sideways for a while. So if it breaks below that 61.8, you kind of need to reassess because you want to see a natural progression of price up. So if a price is coming back, so here's that low that we're looking at. If the price comes all the way back to this low, chances are, we're not going to get a meaningful bounce. We can get little bounces here and there, but as far as this trend that we're looking for, like an uptrend, we want it to bounce around that 61.8 Fibonacci retracement level. Okay, so that was the first thing that we're looking for, and clearly you can see it reacted off of that level. Okay, the next thing, and really quick on these Fibonacci retracement levels, notice how it broke a little bit below that. You really don't want to get super exact with these Fibonacci retracement levels, because at the end of the day, these are just invisible dotted lines on the screen, and they're not actual support or resistance levels. It's just an area that you want to look for bounces on, and you really want to combine these Fibonacci retracement levels with other things, like, for example, a gap fill that we're about to discuss, or a support that we're about to discuss. You really want to combine it with other things. Okay, so with that said, the next thing on the list was a gap fill. Okay, so you can see, so what is a gap? If you don't know what a gap is, well, a gap is really easy to see. You can see here was IBM that traded right here. The next day, boom, gapped up. Look at all this empty space. Empty space. That is a gap. And what it means is IBM didn't trade anything between here. Okay, so when you have something like an earnings release, which is just a big news event, then you're going to have a big gap up like this oftentimes. Okay, and what it means, it just kind of skipped all this price. So IBM didn't trade within here. It just opened up about $10 up. Okay, so typically what you'll see is a lot of gaps like to fill. Okay, so we came back down here and we filled this gap right there. All right, and so we filled this gap, and that's what we're looking for. So now that it filled that gap, it's like, okay, well, now we can continue this move up. Okay, so that's when we look for gaps. You look for gaps to fill, and then if the trend is up, you want to look for a bounce from that point. Okay, so that's the gap fill. The next thing that you want to look for that we were looking for, is some kind of a reversal signal here. And we got that with our patented TA reversal candlestick pattern, and I'll go over exactly what that is right here. So we've got right here, from right here to down here, IBM was clearly in a downtrend for about a month. Okay, we were heading lower. It's very clear to see lower lows, lower highs. We're heading lower. Okay, so what you want to look for on the TA reversal pattern, it's a 3 candlestick pattern. Okay, so each day is a candlestick. Okay, each day is a candlestick. So this is the day 1. Okay, day 1, and then day 2. This is the most important day right here. Is we gapped lower. All right, so there's the close of this day 1. So day 2. Here's the open of day 2. We gapped lower, plus we ended up closing, the bottom red box is where we closed below the low of day 1. All right, so gap down, and then the close of the day closed below the low of day 1. Okay, now for the third day. Okay, the third day, and this is what makes it a reversal pattern. As of right now, with day 1 and day 2, it's just a downtrend, okay? Because you get lots of day 1s and day 2s throughout this whole downtrend, okay? So what we did with day 3 is a gap up right here. You can see day 2 closed down here. All right, I'm just going to remove this line so I don't keep hitting it. So day 2 closed right here, and as you can see, there's a little gap right there between the close of day 2 and the open of day 3. All right, so it gapped up, plus it closed over the high of day 2. So notice here, day 2 and day 3 are basically mirror reverses of each other. Okay, so day 2 gapped lower and closed below the previous day's low. Day 3 gapped up and closed over the previous day's high. And when you get that 2 days in a row, you have this bearish wash down low and then a quick reversal the next day. That is where you look for reversals. Okay, so that is the TA reversal pattern right there. All right, so I'm going to move this line back up here where it was supposed to be. Yeah, that's right where it's supposed to be. Okay, so that's the TA reversal pattern. The next thing here is resistance turning into support. Okay, so what I'm going to show you here is this level, about 146, let's just call it 147 to use a nice round number, it was resistance here. You can see we closed below it, turned into resistance there. Here we hit it from underneath, so it's resistance. Rejected there, that's resistance. Zooming in here, you can see it acted as resistance for about 4 days in a row. We couldn't break over it. And then on this day right here is when we broke over it and it turned into support. You can see we came back into it right here and then bounced huge. Okay, so now it is a level of support because we broke over it. Okay, we broke over it and now it's going to be a level of support. Previous resistance, now it's support. So look at where we bounced from right here. Okay, we bounced right from that level because it was not only gap fill, but it was also previous resistance turning into support. And then for the fifth and final thing that we were using for our analysis here is volume by price, which is very, very similar to volume profile. It's almost identical. Okay, so if you're familiar with volume profile, it's the same concept. Okay, so what it is on the left-hand side of your screen, you're going to notice these longer bars. All right, don't mind the color. Okay, what you want to note, what you want to pay attention to is the length of the bars. Okay, so this bar right here, you can see it comes out and it ends right here. This is the longest volume by price bar. So what does that mean? Okay, what that means is this price point between about 147 and about 145, okay, between here and here, just the length of this, the width of this bar is where the most volume has been traded on IBM between this time period, okay, that we have up on the chart. So going back to basically the beginning of August, okay, so the beginning of August, so 1, 2, 3, 4, 5 months right here. Out of those 5 months, this price point right here is the where most of the volume has been traded. Okay, so what that means is, and how we can utilize this information is because typically when you get a lot of volume that's been traded at a price point, that is a big level of support. Okay, when you're above it. Okay, so or it's a big level of resistance. Okay, so if we were below this level and we came up to it, this level, that volume by price level where the most volume had been traded, would be a huge resistance level. But since we were above it and we're coming down into it, it is a level of support. Okay, so tying all these things in together makes this for a very high probability trade. Okay, it's not necessary that you need to have all of these things lining up, but when they do, you have a very high chance for success for a trade working out. And that's what we like to do at the Trading Analyst and in the membership, is make high probability trades. We don't like to trade a lot or every day even. Oftentimes we do trade every day, but we look for very high quality setups because we want to give a lot of winners. We want to make money each trade as much as we can. So we got the Fibonacci retracement level, the gap fill, the TA reversal, the resistance turning into support, and the volume by price all lining up right here. So let's take a look at this trade and we'll show you exactly what went down. So here is our private Twitter feed. This is where we discuss analysis and post our trade alerts. And we also do these alerts in real time via text message. So most, if not all people, can't be sitting on the private Twitter feed all day long. And that's why we send these alerts via text message as well. So don't worry about it. If you don't have a private Twitter feed, no worries, because these are sent in real time via text message so that you're never going to miss an opportunity. All right, so here's the trade alert. We alerted these IBM April expiration 150 strike calls at $6 was the price of the option that we paid for them. Okay, so if you're unfamiliar with options, don't worry, because most, if not all, of our members start out with little to no options trading experience, and that's why we have a full library of options education videos. We have a few hours of training videos, so it's not like you got to watch these for, weeks and weeks at a time. And the best part is options are super easy to learn. Okay, we got a lot of people out there that think options are super complicated and dangerous and all this stuff, but they're not only easy to learn and simple to process, but they're also one of the most powerful trading tools in the market, which is why we like to trade them often. Okay, so here's that alert. Again, if you don't know what this means, don't worry about it, because when you join, you're going to get access to those educational videos. Also, aside from those videos, is that I'm there full-time, 24/7, to answer any and all questions that you might have. So let's say I put out this alert and you say, Taylor, I don't know what this April 150 means. Okay, I'm going to explain that to you in real time to help you process that information. Okay, so don't worry about it. We got the videos, we have me. You're going to get taken care of. Okay, so we've got this alert here, 150 calls at $6. Okay, we entered in. I'll show you the chart again right here on that reversal right there. Okay, we paid $6 for those options right there. All right, the trade is progressing. We're going higher. We're going higher. Once you have your entry set, the trades pretty much take care of themselves. Okay, so we entered there. It's heading higher. It's heading higher. We exited partially right here on this day right here, and the reason was because of the lows of these candles right here. So I'll draw that little resistance right there. All right, so you can see if I draw that right there, you're going to get that resistance right there. So we exited half of the position right there, and I'm going to show you that alert right now. So here's our exit for half of the position. Again, so when we sell half, that means that we have half of the position remaining because we want to get even more gains until it reaches our second target. Okay, so here's the trade alert. Out half of our IBM April 150 calls at 8:05 from our $6 entry, and that's about what, a 33% win right here on this trade in a very short amount of time. So nice little win so far for us on this trade. So let's go back to the chart. So it didn't hit our second target just yet. All right, so we're waiting, and as this trade is progressing, I'm not just leaving you guys hanging. I'm going over the progression of this trade in the nightly member videos so that you can learn from it, and you can also not only learn from it, but you can have sleep well at night, okay? Because we don't just post this entry and then that's it, okay? We are going over the trade as it's progressing because, you know, I don't have these worries because I have years and years of experience and I have a method and I'm very confident in my method. I know it works. I follow the process and I sleep well at night. But not everybody is like that because it takes a lot of training. So a lot of people maybe get nervous. Are we still holding this trade? Why are we still holding it? And I hold your hand throughout the entire process. So as it's going here, I'm doing a member video, all right? Right here, I'm saying this is bullish that we're trading sideways. What had happened is we made this gain, and as you can see, each day after that, we traded inside the action of this day. So that's what a bullish move looks like, is when we make a bullish move higher, we trade sideways. That's how stocks move, okay? Same thing here. We had this move lower, and then as you can see, it traded sideways. Most likely that trend was going to continue lower. It was just taking a break. So same thing here, trading higher, and then it's holding these gains and just trading sideways before moving higher. So that's what I'm telling you guys in the member video so that you're confident in the process. You know why we're taking the trade and you can feel good sleeping at night. Okay, so that happened, and then we continued higher on IBM up into our target. Now, why were we targeting up here on IBM? Well, a couple of reasons, all right? For one, we've got the resistance from the highs of these candles. So remember, our first target was the lows of these candles. Well, the next target was the highs of these candles right here. And also, if you notice here, look at this volume by price bar right here. It's the second biggest volume by price bar, second to this one right there. So as it dropped off here, not a lot of resistance above us from these volume by price bars, okay? Then we come up here and we have this volume by price bar, and it matches up perfectly with these resistance levels. So that's why we took our next profit zone right here. I'm going to show you that alert right now. So here is the actual alert given on the private Twitter feed. Again, we send these alerts in real time via text message as well. So here's that alert, all out of the IBM April 150 strike calls at 9:40 from our $6 entry. Nice win, congratulations. So 940, that's about a 60% win here on that last half of the position. So a very nice win for us here, for myself and the members in the community. So what I want to do right now is invite you to join today in the Millionaire Trader Blueprint program to start making winning trades in the market. And when you sign up and join today, this is what you're going to get. Okay, so not only do we give you these profitable trade alerts like the one that you saw on IBM, okay? If you only want profitable trade alerts and you don't care about learning and you just want to make winning trades and have someone do the work for you, well, you can do that, all right? But if you also want to learn and know the process and maybe get better as a trader on your own, well, we have all of these other things that are part of the membership as well. So in addition to these profitable trade alerts like the one that I just showed you on IBM, is you're going to get the nightly watch lists, and we post these on the private Twitter feed as well as discuss them in the nightly member videos. So the reason why these watch lists are so important is because we discuss the action that is potentially going to happen the next day. And what that does is prepare you for what's going to happen, okay? So you're going to know ahead of time, okay, we're looking for a bounce here on IBM at this specific level. So when the actual alert comes out, you're not going to be surprised, okay? You know exactly what's going to happen. You're going to know what options we're looking to buy. You're going to know at what price we're looking to buy them. So you're very well prepared ahead of time. All right, and next we have the daily member videos. And in those, we discuss a lot of different things, and it really depends on the day. But on a daily basis, we discuss the watch list. So you're going to have the paper version, or not the paper version, but the written version, rather, the text version of the watch list. But also in the member video, I'm discussing the trade kind of like I did earlier in the video, where I'm discussing the Fibonacci retracement levels, the volume by price, the gap, and all of that. That's kind of a pretty good example of what the member videos are like, because I'm preparing members for the chart pattern, and not only preparation, but I'm teaching you the process. So you're not only prepared, but you're learning and getting better so that you can make better trades on your own as well. In addition to that is a bonus that you're going to get the entire education video suite that we offer to members only. Okay, normally this retails for $3.99, and you're getting it included within your membership. Okay, and in those videos we have, again, as a reminder, they discuss options and how to trade them, and you're very well equipped to start trading options in no time. We've got a few hours of educational material, and after you watch those, you're going to be completely set, because options are not only very easy and simple to learn, but we discuss them in great detail, so you're really going to get a good grasp on them. We also discuss in these educational videos other chart patterns and technical analysis techniques, so you can really learn a lot. So we've got daily member videos, nightly watch list, the profitable trade alerts, all included in the Millionaire Trader Blueprint. So sign up. We've got a limited time offer. This offer is going to come down soon, so you better sign up and act fast. We'll see you on the inside.